Hello friends and welcome. In this video, we are going to see two important concepts, internal check and internal audit. The content of this video are first, internal check. In internal check, meaning of internal check, definition of internal check, objectives of internal check, advantages of internal check, and disadvantages of internal check. Next is internal audit. In internal audit, meaning definition of internal audit, objectives of internal audit, advantages of internal audit, and difference between internal audit and external audit. Let's start with the meaning of internal check. Internal check is an arrangement of duties of members of staff in such a manner that the work performed by one person is automatically and independently checked by the others. Let's see the definition of internal check. According to FRMD Polo, internal check means practically a continuous internal audit carried on by the staff itself, by means of which the work of each individual is independently checked by the other member of the staff. Second definition is given by Dr. Dawar. Internal check is a system or method introduced with defined instruction given to staff as to their sphere of work with a view to control and verification of their work and also maintenance of accurate records as the ultimate aim. Now we will see the objectives of internal check. First object is to exercise moral pressure over staff. Second objective is to ensure that the accounting system procedures reliable and adequate information. Next objective is to provide protection to the resources of the business against fraud, carelessness, and inefficiency. Next objective is to distribute the work in such a business transaction is left unrecorded. Next objective is to allocate duties and responsibilities of each clerk in such a way that he may be held responsible for particular fraud or error. Next objective is to minimize the chances of errors, frauds, or irregularities in the business based on the principle of division of labor. Next objective is to detect errors and frauds easily if it is committed. So these are the objectives of internal check. Now we will see the advantages of internal check system. First we will see the advantages for the business. First advantage is proper division of work. Internal check entails a proper and rational distribution of work among the members of staff of the enterprises, keeping in view their individual qualifications, experience, and area of specialization. Second advantage is detection of errors and frauds. Since no individual worker is allowed to handle it completely from the beginning to the end, and the worker of each clerk is automatically checked by the other. This helps in the early detection and discovery of errors and frauds, and the possibilities of the commission of errors and frauds can be minimized. Next advantage is increased efficiency coupled with economy. A good system of internal check increases the efficiency of work among the staff and leads to overall economy. Next advantage is moral check. Knowledge of subsequent checking of each employee's work by others acts as a great check to commission of errors and frauds. Now we'll see the advantages to the auditor. First advantage is quick preparation of final accounts. The profit and loss account and the balance sheet are prepared without any loss of time. Next advantage is convenience to auditor. Where an organization is operating system internal check, the statutory auditor may conveniently avoid detailed checking of the transaction. He may apply a few tests here and there and can relieve himself from detailed checking. Now we'll see the advantages to the owner of the enterprises. First advantage is accuracy of the accounts can be relied upon. If there is a system of internal check, the owner of the concern may rely upon genuineness and accuracy of the accounts. Second advantage is increase in profits. Overall efficiency and economy in operations results in more profit, thus ensuring larger dividends for the owners or shareholders. So friends, these are the advantage of internal check system to the business, auditor and owner of the enterprises. Now we'll see the disadvantages of internal check. First is costly for small businesses. A system of internal check system quite expensive, especially for small businesses. Second disadvantage is quality is sacrificed for promptness. In an internal check system, quality of work declines because the clerk of the business attach greater importance to become quick and do not care if the process their work gets substandardized. Third disadvantage is carelessness among high officials. The possibility of some of the responsible and high officials being complacent increases as they believe, though not always rightly, that under a sound system of internal check, nothing can go wrong. Next disadvantage is disorder in the working of a business. In the absence of a proper organized system of internal check, there will be chaos and disorder in the working of business. Next disadvantage is risky for an auditor. If the auditor does not apply tests and procedures his own, and if he relies on the output of the system, his work cannot be free from irregularities if the system itself proves to be defective. So, these are the disadvantages of the internal check system. Now, we'll see the concept internal audit. First, we will see the meaning of internal audit. Internal audit is a review of operations and records undertaken within a business by specially assigned staff. It is a post-transaction review to evaluate the correctness of the records and the effectiveness of operations on a continuous basis in an organization by the paying staff. The term internal audit has been defined as the independent appraisal of activity within an organization for the review of accounting, financial, and other business practices as a protective and constructive arm of the management. The work of internal auditor is more or less the same as the external or professional auditor. Being the employee of the organization, he or she has to see that there is no waste and inefficiency in the organization. An auditor has to ensure that the organization incurs liabilities in respect of its valid and legitimate activities. He has to make efforts to find out the weakness of the internal control and the internal check system followed in the organization and suggest necessary improvements. Now we'll see the objectives of internal audit. The objectives of internal audit can be summarized in following ways. First, to verify the correctness, accuracy, and authenticity of the financial accounting and statistical records presented to the management. Second, to confirm that the liabilities have been incurred by the organization in respect of its valid and legitimate activities. Next is to comment on the effectiveness of the internal control system and the internal check system in force and to suggest ways and means to improve this system. Next objective is to facilitate the early detection and prevention of frauds. Next objective is to examine the protection afforded to companies' assets and use of them for business purpose. Next objective is to identify the authorities responsible for purchasing assets and other aims as well as disposal of assets. Next is to ensure that the standard accounting practices which have to be followed by the organization are strictly followed. Next is to undertake special investigation for the management. Next objective is to assist management in achieving the most efficient administration of the operation by establishing procedures by complying with company's operating policies. Now we'll see the advantages of internal audit. The advantages of internal audit are as under. First is staff remains alert because their work shall be checked by the internal audit. So accounting remains correct. Second is internal audit helps to detect errors and frauds and provides suggestions to improve them, which helps the management to take corrective action. Next advantage is internal audit detects the misuse of resources in time, which helps to reduce unnecessary expenses. Next advantage is internal audit checks the efficiency of staffs, which helps to increase the efficiency among them. Next advantage is internal audit checks the books of accounts, detects errors and frauds and helps in its correction, which makes the act of final auditor easier. Next advantage is internal audit increases the morale of honest staff because evaluation of performance of any staffs will be made at any time. Now we'll see the difference between internal audit and external audit. An internal audit is conducted by the permanent staff of the same office to detect weakness in system, procedures and for the improvement. But external audit is the act of checking books of accounts as per the provision of Company Act. Both of them check books of accounts, detect errors and frauds even though they have certain differences. Let's understand the difference between internal audit and external audit. The first basis of difference is appointment. An internal auditor is generally appointed by the management, but external auditor is appointed by the shareholders in annual general meeting. The second basis of difference is legal requirement. Internal audit is the need of management, but it is not legal obligation. External audit is the legal requirement. Next is qualification. An internal auditor does not require specific qualification as per the provision of law. Qualification of external auditor is specified, that is, he must be chartered accountant. Next basis is conducting of audit. Internal audit is of regular nature, but external audit is conducted after the preparation of final account. Next basis is status. An internal auditor is a staff who is appointed by the management, but external auditor is an independent person appointed by the shareholder. Next basis is scope of work. Internal audit is related to examination of books of accounts and other activities of an organization. So, scope of internal audit is indefinite. But external audit checks the books of accounts and related evidential documents. So, scope of external audit is limited. The next basis is removal. Internal auditor can be removed by the management, but external auditor can be removed by the shareholders in annual general meeting only. The next basis is remuneration. Internal auditor is appointed by the management, so remuneration is fixed by the management. Remuneration of external auditor is fixed by the shareholders. Next basis is report. Internal auditor needs to give suggestions to improve weaknesses but no need to present report. External auditor requires to prepare report after the completion of the work on the basis of facts found during the course of audit and present such report to the appointing authority. So friends, these are the difference between internal audit and external audit. In this video, we have seen the details about internal check, internal audit and the difference between internal audit and external audit. Thank you.